Good afternoon, everyone, and thank you very much for joining me. This is the US Open webinar. My name's Russell Shaw, Senior Market Specialist at FXCM, and my email address is shaw@fxcm.com. And today is Thursday, the 28th of October, 2021. Let's just bring up the high-risk investment warning. I'll keep that on screen for a few moments. All right, and here's our market commentaries disclaimer. And finally, our MarketScope 2.0. Just want to bring up the Forex Factory, actually, which I should have put in this as a reference. But we've had a busy day with the ECB, so we're going to take a look at the euro, and you can see advanced GDP over here is a bit short. Unemployment claims is good, so we'll just consider all of these. Let's just bring up the here's the euro. So you can see the euro just stormed ahead on that press announcement. It's hit R2 and it's pulling back. We'll see if there's some sort of pullback that maybe is exploitable. And then the stock market's also doing well. Stock futures were higher pre-market. There are good results from Ford. So Ford saw its shares jump more than 9%. That was on terrific earnings, and it's raised its guidance. Pharmaceutical giant Merck saw its shares rise 1% pre-market after posting earnings that beat the top and bottom lines. Caterpillar's top profit estimates but fell just shy on revenues, but its shares are up 2%. GDP growth for the third quarter came in, so we saw that at 2%, which was below the 2.8. And the jobless claims we saw came in at 281. That's getting very close to the 220 sort of line of best fit prior to the pandemic. We're going to see Amazon and Apple reporting after the bell today, so big results there. Nearly 40% of the S&P 500 companies have reported, and more than 80% of them have beaten Wall Street expectations. All right, let's take a look, see what's happening here. We'll come back to the euro. I think it's one that we should consider. Let's just take a look at the NASDAQ. Okay, so NASDAQ actually is in zone 1. What I mean, it's in zone 1, or the last candle closed in zone 1. The active candle now is dropping. But let's just go down to the Dow. Dow's in zone 2, pushing into zone 1. All right, and let's see the S&P. I'm just seeing if there's any sort of ones that are comfortably in zone 1, 3. And at the moment, we are in the middle of zone 2 for most of the closed candles. The active candles are starting to push a bit. Let's just see the US 2000. Okay, we'll come back to the indices. I think at the moment they're very hard to read. I mean, the Russell is very strict, is in zone 1. The last candle did close in zone 1 over the, right on the border. The others are a little hard to read. The Nasdaq was also in zone 1, but that was off very short candles. Let's just see what's happening here. We'll just put a line in the sand over there, and I want to go back to that euro, see if the the market's going to give us anything here. You got to take a look at the daily. We've got a nice daily momentum on the fast stochastic. It's pushing up nicely, and on the hourly we are in zone 1. R2 obviously resistance for the day, but we pulled back, and now are we able to perhaps exploit that on the pullback? So we'll put a line in the sand here as well. And we've got about 55 seconds. Let's go back to NASDAQ. Let's just see what's happening there. It's not a very comfortable read for this. I mean, 2 candles, strictly speaking, would have to count this zone 1. Let's just see. Perhaps we do get the follow through on our next candle. We have got our pullback here. 20 seconds to go. Okay, so the next 4 seconds, we'll get the next candle. All right, so we're a buy ask. Yeah, that's fine. Let's just take a look at that euro again. And I'm going to go down to the US dollar. Okay, so the US is certainly showing weakness. And just with regards to the euro, I want to see how the market reacts here, because President Lagarde indicated PEP likely to end in March. That's the pandemic emergency pandemic program. What did I say that? The pandemic emergency program chief. All right. Anyways, we'll see the year here is picking up, but the PEP program is due to end in March, which is their asset program. And they're keeping an eye on inflation. So they do expect inflation to moderate, but they're going to be, she's said, very attentive to inflation. Well, that one there has got me very interested in the euro, just to see if the market is going to start taking notice of it. Okay, so we've got 3 minutes here. I'm going to just go back to the NASDAQ. Okay, so the NASDAQ now just not catching. So PEP, the Pandemic Emergency Purchase Program. That's the acronym PEP. And that they're looking to end. And we saw yesterday that Canada is ending its asset purchasing program. It's got 2 minutes 24 here. Here's the pullback. Here's the momentum push. Okay. Here is the condition 1. Here's the condition 2, and now looking to see if condition 3 is going to be satisfied before we can be involved. I'm going to just go back to NASDAQ again, just to remind everyone, Amazon, Apple results out today after the bell. And we'll take a look at the Russell as well, which was the best of the indexes. Okay, so we need to see some pullback here because we're behind on the men. I'm going back to euro. We've got $1. I think about it. And if we take a look at the dollar, the dollar is in zone 3 with quite a bit downwards momentum according to the fast stochastic. So I'm just going back to that euro. Okay, and it's at R2 level again. Here. All right, so we've got the three conditions. So I'm going to put on a trade here. Yeah, we'll go 93. Okay, that's 1% of the account. Okay, 1% of the account has the stop loss, and we're going to switch this to bid now because we want to see the spread difference. If I go to ask, we're right on the price is right on the ask. Go to the bid, well, we're below it. That's because of the spread. So we want to make sure we're counting for the spread. And we want to get this risk up as quickly as possible if we can. Okay, and I'll be keeping an eye on this momentum as well. Okay, so here's the resistance. Two minutes, 50 seconds to get the next candle. And we've just got this resistance right ahead of us. And it's a fairly strong resistance, one would think. We go to the hour and it could be influenced R2 there. Let's just keep an eye on it. And I want to get this risk out as quickly as possible. How should we go? Okay, so 80 plus spread. Just resting with this resistance here. We've got 1 minute 35. We'll get the next candle. Okay, we're under a minute now. Here's this candle. All right, find the moving average. We're going to use it for stop if the trade starts going in our favor until the break even, and then we'll change it to dynamic. Okay, so we're still battling with that resistance ahead of us. Okay, there the bulls having another crack at it. Still exerting selling pressure there. Okay, there the bulls making a stand. We've got 3 minutes and 20 seconds. We're going to start reducing some risk here. Okay, I'm going to be a bit more aggressive with the top if we just can away from the resistance level. Got about 5 pips of risk off at the moment, but you can see we're still under the influence of that resistance. Keep it another 2 minutes here. So what we're looking for swing. What is the thing? It's higher highs and higher lows. Higher highs, higher lows. And just keep an eye on the stochastic. As long as you're above 80, we should be okay. We've got a minute now, and just keep an eye on the moving average when we get a new candle. The EMA is 9. EMA 9. 9. And it's an exponential. We've got 10 pips of risk off, so we've now got considerably less than 1% of the accounted risk. Okay, we're pretty close to break even here. Peter asking why 9 and not 10? I don't think it will make all that much of a difference. The reason that I chose 9 here is because of a course I did years back by Nick Raj, and one of his stop loss methods was a 9-period moving average, and Nick used to trade the futures market, so that's what he used. I guess it just stuck with me there, Jan. But the idea here is I don't think it makes all that much difference. In the day, it's all about putting on that that sort of 1% risk management. Some books okay 2%, and having that stop loss in and then trailing it up. Inevitably, what's going to happen here, Jan, is on the dynamic, and then it won't really matter which moving average we're using. Yeah, I would say psychological, yeah. Yeah. Okay, so this is the next level we got to beat. So we still got these higher highs and higher lows. The next candle is going to be interesting to see if that maintains. This is the next level we've got to beat. Okay, so we've powered through this R2, right? And 3 we'll get the next candlestick here. I mean, these are big. So big candles. This is the candlestick for the ECB policy statement released, and these two combined is also the press conference. Then we saw that after the press conference we had pulled back massively, and then we looked to get back in on the pullback, right? Now we've just got to 1 minute and 20. Not overbought yet on the measure. So now 1 to 10, we look for 80 as the overbought. So just let this a bit of breathing room for now. Okay, so there's some big sellers here at this level, and 14 pips in. We're going to have to start protecting that soon. Another 30 seconds. Okay, get this candle now. And now we've got to see if this is a contra, right? All right, let's pop this up. And we're going to switch this to dynamic. All right, let's see if we can get pulled up with the flow of bids, hopefully. All right, so I'll just show you the hourly here. So this is the next hourly candle, and I mean a fair amount above R2, right? So one would expect the R3 to be kind of the next target. That, of course, is supposition. There's no guarantees here, but we are above risk, which is good. If we fall back, we'll get stopped out, but then maybe the R2 acts as support and kind of pushes the euro up again. Okay, we'll take this out for now because this is the next highest high, and we look for series of higher highs, higher lows, right? So what we're looking for effectively, I'll go back to trade now. So okay, so there's your three conditions: high, low, high, low, high, low. See, there's the swing, high, low. So that's kind of what we're looking for. Go to 2 minutes and 35. Okay, so it looks as if we've got 4.5. I mean, I don't think this is the most accurate reading that I'm, but between 3 and 10, between 3 and 10 throughout the day. That's the scalp. We're on 16 here, so we'll start pushing up again fairly soon. Yes, that's the next level. Take a look at that stochastic, how it's just waving along in that upper quintile. I mean, there are concerns. This is, I guess, the normal concerns a trader will have in a position. So you've got a long candle, short candle, long candle, then short, short. In other words, why is there a short candle? So why aren't the bulls pushing? You know, if we really right about this, the bulls should be pushing, but they kind of very small candles here, very small candles. So that's a concern of mine. Yeah, these days it's not always like this, Jan. Oh, we did a nice trade on the Nasdaq the other day. We did a nice trade on the Nasdaq. All right, we can just move this up because this resistance is being quite steadfast. So we're just going to capture some more pips here. Remember, we've got this on dynamic, so it's going to trail anyways. So again, we've got the higher low, higher high. See that? Low, higher high. So as long as we have that, we've got the swing going. But it's at some stage that is going to be compromised, and then we'll have then we're going to get stopped out. Okay, there it's dragging the stop up again. No, it's a nice long candle. That's better. Okay, you can see that the stop there is being trailed up nicely. All right, so we now are 28 pips in profit. Okay, so we're just going to just let that dynamic stop loss now do all the heavy lifting, right? Okay, and we're slowly making our way here to this R3 level. And now we're over. You see that? On the hourly, that 8. So I'm going to just leave the stop right where it is. Okay, got another minute. We'll get the next candlestick. There's the next one. Okay, so this level here is the buyer. Let's just see if they have the strength to push through it. Okay, there the bulls trying to sort of muscle in there. Let's see if they can pull the stop up a little bit more. There they're having another go at the sellers. Okay, they're trying to push. All right, they're pretty close. There we go. Okay, they've started pulling the stop up some more. Okay, so we're capturing more pips here. Because we're pretty close to 30 here. Okay, bulls slowly losing control. Just taking control of this candle. Okay, the bull's back at 75, 76. Got 10 seconds, we'll get the next candle out. Just modify this slightly, so we're right there. Sort of in a equilibrium point just for the last 10 minutes. So we've got buyers and the sellers have kind of settled on price around about 74 pips. At some stage, one of them is going to win out. So if it's the bulls, our stock will go up. If it's the bears, obviously our stock's going to get hit. So what we have here, this is now an inside. Let's get rid of this. This is an inside candle. So indecision, clearly the fact that it's the bulls that have kind of lost that decisiveness is something that we just got to acknowledge at this stage. Okay, they're the bulls exerting some more force. Okay, we're back at 76 on the pip count, back to 75 now. So still a battle going on between the bulls and the bears. Neither one should have relenting. That 76 level being heavily defended by the bears. All right, here the bulls pushing through. Now they've reached 77, putting up our stop some more. And we'll get another candle in the next minute. So we're right on the 79 pip level now. You can see the this is where we'll be selling. This is the level that we'll be selling at, right? We sell at the bid. Yeah. Okay, we've hit the 79. All right, there we've hit the 80. Bring us up again nicely. All right, this is our next level here. We still this was a terrific swing, just consistent high highs, high lows. Just while that's on, it just brings. Just remember that statistically, most trades are going to be to average, assuming that they are normally distributed, which is arguable. I think consensus is that it should have a negative distribution, but by and large, 68% of our trades will be between these two standard deviations. So this is the standard deviation to the left, and this is the standard deviation to the right. These are the one standard deviations. Your stop should cut anything beyond the first standard deviation, and then every once in a while you'll make a really nice trade. So this was quite a nice, yeah, a 30 pip scalp, I think, is terrific. The bull's still not finished yet. They're doing another crack at that 80 level. Yeah, and just right. And this is the one that keeps giving. Yeah, Chris, this is exactly what, and I think all traders kind of need to just, you never know which is the one that's going to, yield to the pips. But this was also, I was looking at the euro before we logged in, specifically just looking how it was reacting following the press conference, and I felt, it's worth just keeping an eye on in the US Open webinar. So I'm glad we did. Okay, so we've got another 35 seconds. We'll get the next candle. We'll see if it pulls the stop up further, or if it hits the stop. Just remember that we are overbooked now, quite noticeably on the hourly at a very intense sort of level. The higher you go on the day, the one would expect the more intense the resistance. So we ride at this R3. We've kind of been trapped in this level now for the last 10 minutes. So we still got intense resistance here. So now the sellers kind of muscle back against the bulls. See, there's still a fierce struggle going here, right? We're really close to getting stopped here. It's almost as if it knows the time, right? Two minutes to the next candle. Let's see if we can survive the next 2 minutes. But sort of a 30 pip scalp, as I say, I think is a terrific result. Gee, that's close. Yeah, we're about it. There we go. In the nose. Okay. Excellent. And that sort of brings us to the conclusion. So this was a terrific one. Thank you very much for joining this afternoon. Tomorrow we'll do it all again. We'll do the DAX. We're going to have a shorter. We'll have a shorter London Open tomorrow. I've got an appointment. I've got to go to, and then we'll do the full-on scalp again in the US Open. So just to keep you guys in the know-how. All right. Good evening. Safely healthy evening, and we'll chat tomorrow. Thanks, guys.